Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
There's something else that's moving higher that I want people to be really, really aware of. And it was funny because it was a soundbite last time where, you were reciting Bloomberg that said credit spreads are fine, so carry on. And I've been showcasing that credit spreads are not fine. In fact, I did a big report for clients talking about dollar and yields. And my very last chart was, in fact, credit spreads saying, this is what I showed last month, beginning of the month, where I said, this is the one chart that keeps me up at night, this very protracted downtrend, and this is high yield OAS. It looks very much like it wants to move higher and NASDAQ wants to roll over. Well, fast forward a month and we are here. So this is already, by the way, yesterday. No, this is the first. This is 3 days old because the first is actually a day delayed. This is not real time, right? This is just your stock charts. Anyway, so the point is credit spreads are absolutely starting to expand. And one of the things that I said for clients that are, trying to figure out the whole fixed income space and bonds is that it's really also very tough because are we going to get a steepener or are we going to get a flattener? And very much will depend on what happens with the tariffs.
Well, this has been, and that's been the concern. This kind of highly correlated sell-off in some areas has been a concern because that really points to there being no place to hide. And that's coming to fruition here where there really aren't very many places to hide. So unfortunately, I'm still holding out hope that we've got sort of a little bit of work to do the rest of this week to see what happens.
Yeah. I mean, we're right back to the 31st. So we've wiped out 3 days of gains, but that candle is an expansion candle of size. That's what we're going to be watching. And obviously bonds and gold had already been bid up in defense, in protection mode. And by the way, all of my intermarket stuff says the same thing. Bonds are going to outperform stocks. They've narrowly eked out some gains over equities this quarter. And it was the worst quarter, oh my goodness, in the second quarter of 2022.
Yeah.
And only 10 times in NASDAQ history have we had a drawdown of more than 5%. So there was a big hit to it. There's no question about it. And I would contend we've got more to come. But today is a little bit special. It is a knee-jerk reaction after hours. They can control that whole liquidity scene. And right now we even have dollar moving higher, which is part of that risk-off mode. So let's see what we can get after this week is done. Like you said, we've already had the flattener. We've already had bonds and gold bid. A lot of shake and bake in equities. Let's talk about protection because last time we actually talked about how April 2nd risk was not priced in, right? That was literally the title.
It wasn't. It was very cheap and it very, very quickly readjusted higher. Yeah, it was very, very cheap. I'm not sure what they were thinking, but we saw a really big steepening of the whole term structure, particularly around that particular date. And so at this point, I think you've got the high steepness, you've got the fairly high implied volatility, high option pricing. I think you've got to go with downside. I don't even love downside flies as much. I think, you're short some Vega, which isn't that great. But I think you just have to go, just like we said last week, use the KISS method, keep it simple, downside put spreads to achieve, basically like the JPM caller, just put on a downside put spread. And again, this is, as I've been telling students and members, this is an environment. I don't love selling calls with markets making all-time highs. It makes no sense to me. But in this kind of market, you can fund a little bit, even though we've seen that downward pressure on the call side. I think you're getting that higher option pricing that you can use to fund some of that downside, because there's no question downside protection is not cheap right now. That is a problem.
All right. And we have a little other problem, which is currencies right now are freaking out. So this is something that we won't really feel until tomorrow and such. But the point is, when we get some currency volatility that can absolutely seep into equity volatility. What do I mean by that? Dollar yen falling, for example, it means yen gets bid with bonds, which can also trigger some of that basis trade unwind where they have to sell the very important stuff. And then they basically just concentration risk, de-risking. But we can also have some events that are in retaliation, which we can't really see because they're the gray swan. For example, a yuan devaluation. So China doesn't like what's going on here. They've threatened that they will retaliate, and then they do. And some of the retaliation that I've read about of late is related to not just what Trump had signed back on February 21st. Remember that we joked about this, but I was up late, literally until midnight, reading an executive order that Trump had just released released. And I basically said, this is a no-go for me, which means China Place had been very, very, very undervalued. They had risen. It was a beautiful trade in BABA and KWEB and FXI. And I said, no more, because he's already intonated that he's going to put a kibosh on U.S. investment in all things China. But they hadn't followed through with anything, with any policies or regulation. And then Besant came out a few weeks later and said, yeah, I'm looking at that. Our department, Treasury, is looking at ways to limit U.S. investment in all things China. It was the same concept. Well, then China came out on the 23rd and said, we actually, if anyone threatens our trade, we actually have now the power to take their intellectual property, their physical plants, their cash in our banks. That's news. That's retaliation. Would they do it? Who knows? But they passed. It's a thing. It's a retaliatory measure that they're putting in place to say, if you really do follow through, Trump, April 2nd, we've already changed the laws. That is not put into any of the risk models as it relates to, think Apple, think of all that manufacturing, all of that.
Oh my goodness, yeah.
Dependency in China. Yeah. So they came through and basically said that. Now, U.S. investors didn't see that headline anywhere. It's me looking for it. So
right, we can count on you to do the real digging, Samantha, and that's it, right? If
Apple is down 5% as an example. Apple is down 5%. We're just talking about that.
Yeah, 213. There you go. There's some realities coming to the forefront here, which is the gloves are off, and everyone else is going to say, "Okay, you want to play that game? We're going to get you want things to get nasty. Then things are going to get nasty."
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.